Good evening, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for Wednesday, and we're now at the 7th of September, 2022, about 6:35 p.m. Central Time. You know, today reminded me, at the end of the day, I was watching financial TV and all the market wrap-ups. Martha Vandella, they're dancing in the streets because the big break, a lot of people think that was it and the market's taking off. That's the song that came to mind. I started laughing. Well, I'm not dancing in the street. We might be at the phase now where we broke very hard. For those of you that saw my morning video on YouTube, when I do my morning financial, I pointed out that the September Russell 2000 had now 7 days in a row down. Last time it did that, according to one of the research stories that I read, I certainly don't count those things, but different analysts do, and I read so much in the morning. That hadn't happened since December of 2018. So I said to people, you know, this could be where the market's just plain ready to give you a bounce. Why? Because 6 days from now, you're going to get the CPI number. The market has been on its butt ever since Jackson Hole. It has come down hard. There's that 7-day break that I was just talking about. And markets need to pause. Nothing goes in a straight line. This could be the pause. Do I think we've changed anything? No. Could the CPI, if it comes out a big decline, change my opinion? Yeah, then I can get changed. Not bullish necessarily, but not as bearish as I am. But if the CPI is delayed, what you'll hear people say, oh, it's going to show up later because energy prices are falling down so much and blah, blah, blah. We'll hear that. We'll hear about the Chinese slowdown and other items. We'll hear that the labor's good. We're looking for the jobless data tomorrow. Is that going to be strong or weak? What is that going to do? Those are the stories over the next 2 weeks that you're going to be hearing. So we've had the first phase that maybe, just maybe, today was the pause in that. A turnaround, I don't see the turnaround. So we'll talk why on the charts. Dollar's still strong, but many of the currencies coming up. You're no longer under 99 in the euro. You're sitting here now back at the 100 level. The British pound up a little bit as the market's waiting tomorrow to see what the UK new Prime Minister, Ms. Truss, comes up with for a package. She's going to announce it tomorrow. She had her cabinet today. I don't know if you ever watch UK Parliament TV. You heard what I said, UK Parliament TV. It is a ball to watch. It is not like the American, the House of Commons is nothing I've ever seen. It's fun, and I've been watching it for years. So today they hit her, and she hit back, and she's a feisty one. I like the woman. She doesn't get scared of anything. Today was her first real day of taking the jabs, and she not only took them, she dished them right back out. Very impressive. So when we look at the S&P, where's the battleground? I wish I could tell you I'm surprised. I thought we would fight a battle at the 18-week moving average of closes. That number's 3998.5. We are at 3929. We hit a high of 3988.75 so far for the week. I don't think that's too far off, so I'm not surprised. We've come down nice and hard. The market made a lower low, turned up, but did it do any real damage yet on the chart? To negate this leg down, two things have to happen. Let's go to the first. You've had a very clear pattern of lower highs, lower lows. I don't care where you go to school or what schooling you had even at home. The definition of a downtrend is lower highs and lower lows. You can filter it to your blue in the face. That's exactly, by the way, what I do. But that is the definition of the downtrend. The last rally high was sitting here at 40.19 so that's one of the potential numbers the market has to get through in order to break the pattern of lower highs and lower lows. The second thing I look at were the moving averages. Well, they're still way above you, so you could get a rally, but it's not going to prove anything to me other than maybe the 3,900 zone, to be specific, 3883, I mean, that's 3,900 zone, was, as some of the chartists thought, the first level. trying to support itself. And we saw that from back over here. This is exactly the area they were looking at, and we've talked about it in this tape a bunch of times in this video. When we look at Bollinger Bands, you would hit the bands and you've moved to the right-hand side. Very typical, but no longer a market that's just plunging. Markets that want to just plunge latch on to that band and they don't leave go. You get surprised at how they hit it. They'll back away for a day or two and they go right back to it. Well, here you were down, you came back and you haven't gone back down to it. So, seems to me that the market's giving you a bit of rounding here. There's a very bearish development happening in the market that you'll hear moving average people like me talk about. Your 18-day average is starting to converge on your 100-day. They're right now 65 points apart, but they're going to converge over the next week or so. Now, as they do that, that's getting right into the CPI day. Just interesting. Now, look at your number here. The reading is 1916. That's tonight. Where did the market finish for the day? So on the finish, and let's get to Wednesday, the slow stochastic reading did not lose its embedded status. Therefore, until that is lost, which easily could be tomorrow on a reading over 21, then that would be a sign to me to come out. So I have two things that have not occurred. The word is not. You haven't made a higher high and you haven't lost the embedded reading, which tells me, I know you're going to find this hard to believe after a day like today, the sellers are still in control of the market. When we come to the Nasdaq, you still have the embedded reading. You haven't taken out a previous high. Nice rally, but that's all it is so far. It is not, as a chartist, a turning point yet. Could happen. I give it credit what could be, but it hasn't. In the Dow, you haven't lost the embedded reading. Learn how to work with this in the Bollinger Bands. So the pros that today might have been selling these markets. Now, I teach you in my enhanced Bollinger Band course what you do if you make a higher high or a lower low first, depending on what the embedded reading is. Today was a day where traders shouldn't have done anything. It was a look-see day. As I pointed out last night when I wrote my update, I gave them the what-if scenario, and today was a day not to enter here. In the Russell, as nice as the article was, you're at 8 days now. You heard me. Because what do we have? Well, is it 8? No, 7. You finally had an up settlement out of all that. They got what they wanted. Did it change the trend in any way? It did not. Where's the resistance? Now the resistance becomes the 100-day average. Because the market stayed under it, the question is, what does it do? Now, on the way down, it paid very little attention as support. When it got under it, it paid one-time resistance notice. Will it do it again? Will the market lose the embedded reading? If you get a settlement over 21, I think the bears will abandon ship. If it's not, they're probably selling here, seeing if there's anything left to the downside. I doubt they're doing it real heavy, but I don't think they're buying at this point. Let's get, if we could, over now to the next chart. I'm still learning my newest toy here. You'd think you know it, but I was so used to the other one. In the VIX, I have mentioned over and over, my problem is you haven't had a capitulation in the market. If the VIX gets into the 40 level, I think that you'll get a bunch of analysts like me starting to say, okay, we're getting so bearish in this market, maybe we're getting to the point of overdone. We're not there. This is a very orderly bear market. I know the bulls hate me saying that. As a chartist, that's what it's been. You're not getting to extremes. When you look at the bonds, I moved to the Decembers, as I told you. You have a bearish embedded rating. So on these rallies, what do I think the pros are doing? I think they're selling short. I think they'll get out if you get a reading over 21. Right now you've got a 1576. And I think they'll look again for the Bollinger Band. Here's a real bearish pattern. You rode the band, went away for a little bit. Remember I showed you that other pattern, and you came right back to it. That's something you always look to see. What is the pattern of the market doing? In the 10-year note, rode the pattern. Had this few-day rally, came right back to it. Are you going to lose the embedded reading? Well, I don't play that you're going to lose it. When I'm playing it, I'm playing that on a good rally, I'd be looking to see, what do you do if you're another 10 points up? Is that a sell zone? The Bollinger Bands tell you in my course where you put your orders in to go short. There's a moving average that you use. And don't know yet. Can't answer the question. In the dollar index, when we reopen, will you lose the embedded reading? You close right on 80. But you have to settle under 79. Just getting under it intraday doesn't mean a darn thing. Markets do that, and then they flip right back on you. But you're at a zone where I think it's time to abandon ship. For those of you that get my UUP, on my SPDR ETF subscriber video, I said go at the market this morning when we were, I think, at 29.61, had traders long under 29. And I said, probably time because you're up like that into the resistance. What are we going to be, a hero for the CPI report? I said the money's been made. Leave it. Now, other trades I put out in that, they're underwater going home. Not by very much, but they're under some water. Get a correction tomorrow off today's rally, they'll probably be right back in the money. So, got to see how that's going to finish out. Euro telling you to do nothing. You're not embedding. I can't make it any clearer. Nothing to do on that chart. British pound. You're still fully embedded. You're in a downtrend. I'm looking tomorrow to see what Ms. Truss says, what her plan is, the reaction, and intraday, I'll make a decision if you maintain this to possibly go short. Not long. I'm looking to be short, but it's a government report, a big one. I want to see what her plan is. How is she going to fund upward of 200 billion pounds to pay for energy and keep the economy going without raising taxes and the like? She's a magician, apparently, and that is not being facetious. She believes she has a plan. She gave a great reason why not to tax oil. She wants them to produce and produce and produce. And if she puts windfall taxes on, they won't produce and produce. I get it. I do get it. And she gets it. But how do you pay for any of this? Look what happened to us from COVID. Now we got the inflation animal. In Bitcoin, you're still very much in a downtrend. The market looked today at the 3,900 level in the S&P. It didn't budge. This market's getting sold on these rallies until that red line closes over 21. Then we get to the Brent versus WTI crude. Well, there's a problem here. First off, the bulls such as Goldman Sachs, they are very wrong, this market. They keep calling for 125, possibly 140. And as you get into the Brent, you got to look, you're down to 87. And this market just recently came from 100 down there. Now, could the things turn around very quickly to drive it up? They could, but I don't know what those things are. I just read the EIA report. They come out with their monthly reports and they tell you how they look for production and Brent and natural gas and the like. And for next year, they're talking, I think, $97 a barrel average. So they're not in the camp of Goldman. And while they think we could get a rise in natural gas now as winter comes in, they think natural gas can fall, I was reading it, about 30-40% because so much more production is about to come online next year in natural gas in the United States. I'm wondering about that because we're going to export like mad. So I don't know, but I guarantee you they're smarter than I am. But I'm not a fundamentalist. I'm a chartist. Word at the top, Nathan. Combination, deadly combination, 100-day average Bollinger Band. I teach to pay attention. Look at your stochastics, look at that. This is where the trade's the most bullish. Everybody's talking from there. Now we're going back to 1 1/4. And my work is saying, it doesn't matter if you do or don't, you got to be out of the market. Gasoline, you're still completely coming down. This sideways action, and here's the beauty of it as you and I look together with this. Let's see if I can back this up just a little bit to give you an idea. Yeah, it's going to let me do that. So let's do it together right through here. All right. I want you to look right here. This is a setup to learn. Both times you settle under the Bollinger Band and the bottom quadrant of the day. I divide the day into 4. Until the market gets back over the most recent high in the market. I say this is a breakout on the downside. Traders will think I'm crazy. That does not mean I would tell you to go short under a Bollinger Band. I'll clarify that. I would not. but I'm looking on a hard bounce inside of it to be a bear seller. And that's what you get from the breakout. Now, there's more to it, but I'm trying to give you ideas as how you work with it. These are patterns that you see over and over. Learn to work with them. Nat gas, now you're down into the 100-day average. This should be the support zone where the market has to decide what to do, and you're oversold. So as you can see, I wait at times. Now, I want to make this, wait is not W-A-I-T, W-E-I-G-H-T. I can't spell. I wait at times what that Bollinger Band and the slow stochastic are doing. Sometimes they're not in play at all. You go back to your normal traders. The market overbought, oversold, in an uptrend, downtrend. What's the last swing line, low or high? What's my risk if I enter the market? Love that type of trading. Other times, the market gets taken over by these enhanced Bollinger Band pattern that I've learned and I teach. 13 videos will teach you how to work with it. You can do it yourself. Spiders, ETF stocks. They're coming out with single stock ETFs. They tried that in futures. You do know that. It was a total failure. I know a lot of firms that put a fortune trying to develop that in it. I actually thought it would succeed. It was one I was very wrong on. I said, hey, you get all this crazy leverage in futures. Well, now they're making it an ETF. I can't answer you why, but they're making it an ETF. They'll probably have some of these go with crazy liquidity, not liquidity, but they're going to take the ratio of what you put down. So it'll be 3, 4, 5 times the value. A lot of volatility that they're going to build into some of these ETFs. Okay, there's something for everybody. You know, the ETF market has gone crazy and bonkers. Plenty of them fail. We'll see if this fails or not. I certainly won't be joining that anytime soon. I like my 50% or 100% leverage when I'm trading stocks. I don't need that. But why not learn? With 13 chapters, you get the charting software, you get 2 weeks access to all of my research, the morning videos where I drill this into you over and over and over. And you can write me, you can call me, I'll answer your questions as well. I'm Ira Epstein. Take a look at this and learn something. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.